Good morning, everybody. Thank you for being here. My name is Kellen Ketchersid. I'm one of the co-founders here at Stag Business Coaching. Here in a minute, I'll introduce you to my business partner here, Albert Gillispie. We're just so grateful that everybody would be willing to listen to us this morning. I'll just tell you a little bit about both of us, and then we'll get started. So I actually came into the business world via the medical sector and biomedical, biotech. So I worked for a series of companies, and first, if you've ever had somebody sick enough to go to the Mayo Clinic up in Rochester, Minnesota, I actually did molecular genetics there when I first started out my career. Ended up moving to Lubbock and working for a biomedical company, and then served as the director of operations for a biotech startup. That was through the Texas Tech Innovation Hub. That's how I came into the business world, and through that avenue ended up in operations. So this is a big passion of mine, helping business owners grow their business and streamline their operations. A lot of business owners get to that point where you've grown and this thing is bigger than you, and it's creating a lot of headaches and a lot of fires. So that's what we try to help with at Stag Business Coaching. My partner here, Albert Gillispie, comes from a little bit different background. He's started and founded several multi-million-dollar companies over the course of his career. He is serving on the board of several good organizations, one of those Lubbock Christian University here in town. He's also the president of the Lubbock Apartment Association. So I'm excited to introduce him to you this morning. He's going to be speaking on cash flow and how to manage your finances. So I'm excited to hear what he has to say and help all of you guys in that area. After this session, we'd be happy to talk to you about how we can help your business in the specific areas that you're struggling with. So with that, I'll turn it over to Albert.
Let me get your
Oh, yeah.
before I throw it on the ground. Man, I had no idea what to expect driving in this morning. I didn't know if there would be two people in the room, but when I exited and saw the entire parking lot full, I was like, okay, oh boy. And I was not expecting this, and so this is awesome. This is exciting, and small business is the backbone of our community, and we have such a passion for small businesses. My dad was a small business owner. My grandfather was a small business owner, and anyway, this is so good. I love this. Warning, before we get started, I am not an accountant. I am not a bookkeeper. I am not any of those things, but have been a business owner for a decade and really have a passion for it. How can I dumb this down and keep it as simple as possible so that I can make good business decisions? And so that's really what today's about is all right, how can we give you the brass tacks, what you need week to week, month to month to take control of your business? And so now, how do you, I assume our audience is made up of business owners and business leaders, and right now, how are you making financial decisions for your business? How are you deciding what to do with your cash? How are you deciding what to even charge your customers? How do you know if your business is doing well, right? I think as business owners, there's different seasons, and sometimes you're just checking the bank balance, and you're like, all right, is there cash in there? We're good. And other times, tax return time, you're like, well, how much do I owe? Why? I feel like I didn't make that much money. And so what I want to help give you the tools is how to make those financial decisions throughout the year with good information, right? Rather than checking the bank balance and going off your gut, I think customers will pay this. I want to give you some tools to make better informed decisions so that we can make decisions with data and information rather than gut and feelings. And so how we do that, I want to think of your business like driving your car, right? Whenever you start your car in the morning, you look at your dash and you're looking at gas tank. All right, yep, we got gas. It fired up. All right, the oil's looking good. And when you're driving, you're looking at the speedometer. And so like following that illustration, your financials are your company's dashboard. This is a safe space. Whenever your accountant or your bookkeeper is showing you financials, show of hands, how many people get a little queasy, their eyes glaze over, and you're like, this is all Greek to me. That's okay. That's okay. You're not an accountant. You're a business owner, okay? But at the same time, your bookkeeper isn't going to make decisions for you, right? They're there to make sure you have accurate and timely records of the business transactions that occur. And then ultimately send that to your CPA so that they do your taxes at the end of the year. Your CPA, your accountant, is not going to make decisions for you either. They're there, come on in, to prepare your tax return and make sure that you don't get audited or put in jail, right? And so you are the one in the driver's seat. And so I want to give you a high-level overview, let's go to the next slide, of these 3 financial statements. Don't let your eyes glaze over yet. I'm going to make this as simple as possible. And so let's start with the, you can go ahead and populate it all the way. Right, perfect, right there. All right, so let's start with the income statement. The income statement is your speedometer, right? When you're driving, unless the cruise is set, you're looking at that the most often, right? It's telling you how fast you're going, right? And what direction you're going. And, in business, it might be going negative. And so this is something you look at often. It's revealing whether or not your business is generating profit, breaking even, or losing money. So as we're looking at this, as simple as we can make it, at the top of it, you have your income. You have several different sources of income in every business. And then below that are your expenses. And then the bottom line of that is your net income or current earnings. And so if that bottom line is negative, you're losing money. If it's positive, you are generating money. And in business, any one month isn't something to be alarmed with, right? It's okay to have leaner months, but the goal as a business owner is over a quarter that we're going to be profitable, right? If we go a quarter, 3 months, and we are consistently in the red, that's a red flag. That's your speedometer saying, hey, something's wrong, okay? And then the balance sheet. So I think most people can get reasonably comfortable with the income statement. It makes sense. We're bringing in money, we're paying bills. What's the bottom line? The balance sheet is your oil pressure gauge, right? It's capturing a snapshot in time. What is the health of the finances of the business? It's revealing, so make this as plain as possible. You have the assets at the top of it, which is just the things and stuff that you own, okay? You have cash, which is what's in your bank account. You have receivables, what is owed to you from customers. And then, you have your inventory or supplies and property and equipment, okay? Below that, you have your liabilities, what you owe. So accounts payable, meaning you've gotten invoices from your vendors and you owe these people money. Notes payable, that's any loans you might have with the bank or SBA or with various vendors. And then those assets minus those liabilities give you your equity. What is the net worth of the business? Okay? And below that you have earnings for the current year and earnings that you are saving from years past. And so the next one is kind of a mystery, and most people don't know what to do with that, and that is your cash flow statement. So that's your gas gauge, right? Cash is the fuel for your business. If you run out of cash, The car don't go no more. Right? And so as simple as we can make this, for the period that it's reporting, if it's a month or whatever, it's what was the cash in the beginning, what cash came in, what cash went out, and what is the ending cash. And so it helps you see how much gas do I have. If I continue to have months with no, and I'm not going to get any more cash in, and this is regular cash out, how many months can the business keep going? Okay? Now, let's populate this real quick. And so, how do these relate? Take a picture of this. This is a cheat sheet. Whenever you're looking at all these different financials, this is how they relate, okay? You have on your balance sheet the current cash, and where that came from is on the cash flow statement, your ending cash, okay? And then when we're looking at our income statement, your profit and loss, income minus expenses, that current earnings, that's where that shows up on your balance sheet. So these are, if you're an accountant, these can be infinitely complex. But as a business owner, these are what these are used for. Your income statement, how fast are we going? Your balance sheet, what is the health of our business? What is the oil gauge? Do we have oil? And then cash flow statement, how much fuel do we have to keep going? And so I want to give you some good rules of thumb whenever we are looking at this. And just a couple, I don't want to, there's plenty of workshops today, and your brains are going to be full by the end of this, but I want to talk through some that are important. And so the first one, that is hard to see, is gross margin, okay? That you don't run your business on revenue, you run it on gross margin or gross profit, which is essentially, my dad's a plumber. He's going to go do this. He's going to go replace a hot water heater, right? And he's going to charge X amount to install that hot water heater. That's going to cost him X amount in labor, X amount in materials, and there better be some left over because he's got other bills to pay, right? And so some good rules of thumb here are to keep your gross margin at least 30%, okay? So meaning my dad, in the example of my dad, a hot water heater, he's going to charge the customer $1,000. His material and labor, at most, needs to be $700, right? So that there's 30% margin at the end of that. And so as business owners, we have to look at what we're doing. All of our products and offerings that we are selling, and look at it through that lens. Because there might be some things we're doing that we're losing money, right? And if we're not looking at these regularly, and maybe sometimes your accountant or your bookkeeper doesn't know how to articulate that to you, of like, hey, this is what I'm seeing and this is what's going on, and it's not making sense. As a business owner, we're in the driver's seat. Like we have to have some knowledge there that we can look at that and see and go through everything we're doing, because some of them, your profit margins might be way more than 30%. And talk about a boost to a business, let's just do more of that. And so that this is one thing that I want you guys to take home and look at what we're doing. The next one are some rules of thumb for operating expenses. And our operating expenses are the things after that. And so when we're talking about gross margin and the cost of goods, and so those are things directly related to the production of that good or service, right? It's the hot water heater and the labor it took to install that, right? That's the cost of goods. These operating expenses are all the other stuff that the business has to pay for, okay? It's rent, insurance, salaries for other positions, accountants, lawyers, taxes, all of these things. And so as a business owner, we want to watch those, right? We don't want to, we're trying to make a decision. Hey, I want to buy this new work pickup. Hey, I want to get a new office. I want to deck it out, right? As a business owner, we need to make an educated decision on that, right? We don't want to go accumulate all these fixed expenses that aren't generating revenue, okay? And so when we're trying to make that decision, here are some good rules of thumb for this. 20% for the fixed portion and 20% for the variable portion. So 20% of that gross margin. So what's left after, in the example of my dad, that $300 that's left after he bought the hot water heater and paid for the labor to install it, that $300. So of that, we're talking 20% for fixed expenses, 20% for variable. And so what are those? These, the fixed portion, those are things like rent, utilities, admin, meaning, like your person answering your phones, marketing, R&D, things like that, okay? No matter how many goods and services you sell, those aren't really going to fluctuate. The variable portion are costs associated with selling and the general management functions of the business that do vary based on the volume of sales, okay? And so some good rules of thumb as you sit down and talk with your bookkeeper and your accountant are, let's see where we're at on those. Are we appropriately sized? And when we're looking to make a decision to buy a vehicle, to hire that next person, can we make sure that the business is maintaining good profit margins? Because if we run out of cash, business dies. One other bullet point that whose expenses have grown in the last 4 years? How about the last year? Okay. If you are, I'm picking on my dad, he's not here, so don't tell him. He went 7 years without going up on his rates. And then it became this big thing that he was terrified. If I go, my expenses are way out of line, I need to go up 10, 15% on what I'm charging my customers, I'm not going to have any customers. And it was this huge stressful thing that didn't need to be, right? I think so many people during COVID, we had this wild swing in what things cost for businesses. That this is something that we need to be talking about often, every year. And so now he's put in place every year as part of the tax return, we're going to look at, okay, we need to go up on our prices 3%, 4%, 5%. We have to do that every year. If we look up 5 years and we haven't increased what we're charging, you're not going to be making as much money. And when expenses whose expenses have grown faster than 3%? Everyone in this room, right? And so we need to stay ahead of that, and it feels bad a lot of times. We're like, I'm going to stick it to my customer. I'm asking for more money, but they understand, right? Right? That they've experienced that too. They don't unless they're watching the news nonstop and they're expecting some big bad corporation from Chicago, and that's not us. Like this is local small business. And
percentage would you increase it at? Like what would you keep it at if you don't feel like your customers would be like, you're crazy?
I think 3 to 5% is reasonable. If it's routine, jumping up 10%, they're going to notice that.
Right.
But I think a lot of the times, that 3 or 4%, like they might ask, hey, last year it was this. And yeah, gas is more expensive, insurance is more expensive. I gotta keep paying my guys well.
And the specifics of your business, might be different. So that's where these strategies of knowing your financials and being able to read them in a way that informs that kind of decision making is very important.
Right.
So, yeah.
Okay, next slide. What do we do with the cash that we do have, right? Who here just leaves it all in one account and once a year when we get our tax bill, we're like, okay, let's see how much that's going to drain. Let's see how much is going to be left over after that. Or when we're paying ourselves, we're not really sure month to month how much we can pay ourselves. And so I want to give you, let me preface this with, I'm going to give you a framework with some rules of thumb. This is not the end-all be-all. This is not exactly what your business should be doing, but these are concepts that I want you to take home and have these conversations. Have these conversations in your business with your accounting team, with your person keeping your books, the person doing your taxes. I want you to have these conversations. And so I'm not telling you to go open up 5 bank accounts, but this is a practice, okay? So 5 different accounts. We have, go ahead and populate all of them real quick. There you go, okay. So these 5 different accounts. We have an operating account, a personal account, a business profit, a tax account, and investment holding, okay? So this operating account, I know you can read, so I'm not just gonna read all of it. The operating account is all the money, this is where all the money comes and goes, okay? So all the money that you make goes into this account. All the money you're paying out for expenses is going out of this account, okay? Part of this, we want to understand what does a normal month look like? What are our normal expenses? Does everyone, and it's okay if you don't, but what's your average expense each month? So you kind of know. This personal account. This is, who here is not in business to make a paycheck? Okay. Paying ourselves is important. There may be lean seasons in your business where you might go a period without getting a paycheck. But if you go too long, what are we doing? Right? And it's painful. Sometimes there's seasons that's hard. Okay? And so we want to sit down and determine what is a fair amount that I need to be paying myself every month. Before I pay other expenses, I need to take care of my household. And so setting that up, that is a separate account from the operating account for our business, right? You can make your life way more complicated at tax return time if you've just been running all of your personal expenses through your business account. It creates such a mess and so much liability to get audited. Let's keep those separate, okay? The business profit account. And so this is where we've paid ourselves, we've paid all of our monthly expenses, and now there's hopefully money left over. So we're going to take that out. Get that out of the way, pull that out of that account to get ready for the next month.
Oh.
This,
So you do that every month?
well,
I'm sorry.
hang on.
I'm sorry. No, I'm just curious.
So what this ultimately is whenever we've set a budget and we know we're kind of forecasting we should make X amount of profit each month. We want to set that aside. This operating account, we want to keep 1 to 2 months worth of cash there, okay? This business profit account, we want to keep a max of 6 months of expenses there. And so it's kind of a rainy day fund, but it's also setting aside that profit. So when you look up at the end of the year, you're like, okay, let's figure out what to do with that. Tax account. We got to pay that every year. You know, surprise, surprise, April 15th comes, or October 15th, every year. And so we want to, this is a conversation with your bookkeeper, with your CPA. How much money do I need to set aside each month? Like, let's do that so that when we look up at tax time, it's not this big scramble. It's not this stressful thing. We've planned for it. And so this is ultra conservative. I'm not telling you you have to do this, but for every dollar of profit, I'm going to put $1 into that tax account. That is ultra conservative, but it's not a surprise. We have to pay taxes. The last one, this is the fun one, right? Once we've our business is thriving, it's humming, we have proper profit margins, and we've gone several months or a year, and we've built up these other accounts. Now every dollar above that 6-month max in this account, every dollar above that, let's put it to work. If we want to bring on another crew, that's when let's buy a truck. Let's buy something that we can invest back into the business that can generate more revenue. We're ready, okay? We bring on this crew, and it's going to take them some time to get up and running, but we've got 6 months of expenses to help support that so that there's not so much stress on that team to produce, right? And so we want to be really, really intentional and have a plan for our money and not just make decisions with our gut, right? Next slide. Yeah, and here, a note here is, when you do need to move money back to the operating account, you've moved $1 to business profit and $1 to a tax account. When I move $1 back, I also want to move tax dollar back. So just kind of a rule of thumb there. So there's all of that framework that I'm not saying do this exactly. But here are some questions. Go ahead and populate that all the way. Take a picture of this. These are questions that I want you to sit down with your bookkeeper and with your accountant and go through these questions and figure out a plan for each of these. And so the operating account, do we have a monthly budget? How much cash do I need each month? What is that minimum balance that I need to keep in that account? The personal account. Tell me, how much can I pay myself? What can I afford? And then ask your accountant, because there's some things that there's a tax advantage to pay for with the business. So have that conversation. Ask them, what personal expenses does my business need to be paying for? I'm sure a lot of y'all have had that, but it changes every year. And so this is something we want to ask our accountant, do I need a family cell phone plan? Do I need a, whatever, company gas card? Business profit. Given that budget, how much can we set aside? And then as a business owner, we're in this to make money. How much do you want? What's a good goal for profit this year? How can we go chase that down and make this whole thing that is incredibly stressful, how can we make it worth it? Okay? And then the tax account, let's automatically set this up so it's not a surprise. How much do I need to set aside each month? And how can we set that up to maybe not automatically, draft over, but have, a monthly, whenever your bookkeeper is finalizing the books, that triggers, I'm going to transfer this amount of money. The investment holding. I think it's deciding how much profit do we want for the year, and then once we hit that, what's the next thing what's the next thing we want to invest in as a company that's going to grow our company? And how can we be thinking about that so it's not, you know, I got this big win, what am I going to do with it? And then all of a sudden, you know, you go on a family trip, you go this, you go that, and then it's gone. But how can we plan for what's the next thing my business needs? All right, I know there's a lot of workshops today. I hope this has made some of this a little more simple. I want to give time for some questions. I'm gonna let Kellen take over for a little bit, and then I wanna, before we field questions, again preface, I'm not an accountant. None of this is professional accounting advice, but just some conversations and some concepts to take control of your finances as a business owner and not worry yourself sick every night. So.
All right. Thank you, Albert. So, I know we've been talking about managing your finances. Oh, I need to get the mic.
Oh.
All right. I know we've been talking about cash flow and managing your finances, but just from you guys that are business owners here in the room, you don't have to stay in just that category. I want to ask you, in 1 or 2 words, tell me what your biggest headache is right now. Payroll. What else? Maintenance. Okay. They go with the cheaper guy.
It's still caught us back.
Uh-huh. Yeah, I bet that happens a lot.
A lot.
Okay, what else? Anybody want to volunteer an answer? I know it's putting yourself out there in a room full of people.
The cost of supplies and everything else has just gone up so much compared to when I started.
Yeah.
And that's just cleaning supplies.
And that's across the board, not just in what you're talking about, but I think everybody's feeling that. There's a lot of people hurting out there in the business world. So even related to payroll or what, you know, that's why I think this subject today, you can get a feel for what we try to do at Stag Business Coaching is we try to start simple, right? Business doesn't have to be overcomplicated. We want to start from first principles and work our way up from there, right? What most business owners do is they are good at something, right? You probably got into business because you know how to do a thing and you know how to do it well. But that doesn't mean that you know all the aspects that go into and all the finer points of running a business. It's hard. It's very complicated. If you have one of our flyers in front of you, you see with our Stag Business Coaching, we try to look at your business from 6 different dimensions. And I'll guarantee you you're weak in at least one of those, all right? Because that's, for a business owner, you're good at some things. There are other things that are not in your wheelhouse. And that's okay. That's how all of us are. So what we try to do is provide a framework for anybody who is looking for help to work in any of those 6 areas. So that starts with leadership, strategic leadership. And strategic leadership is usually an oxymoron when people throw that around, because usually your leadership is not strategy at all. It's just, this is what we do and let's see what happens, you know. Strategy has to do with thinking about the game of business and how we're going to win, right? How we're going to position ourselves in a way that other people who are in the same market are not going to be able to compete with, all right? And how are we going to set our goals up in such a way that we know what success looks like? So we want to talk to people. First and foremost, we start with leadership, all right? Because it all filters down from there. Then we talk about your sales and marketing strategies, your products, or your services, depending on what you're doing. Your operations, because if that gets bloated, it's kind of like what Albert talked about here this morning. If you get bloated in your operations and you're not running efficiently, your business is going to sink, right? We use the illustration of an airplane in our coaching model, and you know, your airplane can't take off if the plane's too big and the wings are too small, you know. And then we also talk about your cash flow, which you just got a little taste of this morning. Of course, when we get into it with you and your individual business, we can get into the specifics, the details. We can't, you know, not everything can stay at this level, but at the same time, if you can learn to go from the high level into the details of your business and know how to have an informed conversation with your tax professional or your bookkeeper. That just helps you to lead your business more effectively day to day. It also helps you make informed decisions, like the one you were asking about earlier. How much should I raise my prices by? Now, in a room like this, we can give you a rule of thumb, but when it comes to your specific business and your industry, and also the strategy that you're using overall to run your business, all of that has to inform that kind of a decision, right? So that's what we do here at Stag Business Coaching, and we want to help anybody in this room who's interested in working with us. Our initial call is free. We just get to know you and know what's going on in your business. Can't really charge you if we don't even know what we're helping with, right? So we do that first hour for free. But in terms of the questions that you might have about our conversation this morning, is anybody that wanted to ask something? Yes.
Yeah, so like I'm just getting started. You guys talking about needing to, if you needed to, increasing your prices and not having to blow, being as efficient as you can be. Has it really? Obviously, I want to grow, right?
Yeah.
I want to move to scale, right? I want
Right.
to build it out, right? How important is it for startups and just getting started to focus on profitability, like from the beginning? Because obviously, it's easy to just like balloon, and just gobble up as much.
Yeah.
Credit can be really easy to get a hold on, but I have to weigh those options. So should I really focus? That's what I'm trying to figure out. Should I really consider more the long game of profitability?
I would say at a startup, you need sales.
Yeah.
You need as many sales as you can get.
Yeah.
That sales solve a lot of problems, but
Yeah.
we need to understand what are our costs prior to that. So like figuring out what to charge,
Yeah.
going through that margin exercise and making sure you have that. Like scaling, hiring people, blah, like all that different stuff.
Yeah.
Like you're gonna get there.
Yeah. Okay.
But right now it's like what price do I need to charge to have a healthy enough margin that makes it worth doing?
Yeah.
And once you can kind of decide that, go get sales. Go get it.
And I'll add to that, there's going to be startup costs in a business. That's just part of doing business, right? But but not doing that blindly and having a plan, so then like, okay, then in order for us to be recouping what we've already put into the business, we need to be making X number of sales, right? Because I know what my margins are and I know kind of what the path is to get into the black and be where I need to be. And you want to do that as fast as possible, right? So that's where a good strategy in your sales and marketing, I think, is the place to start when you're early like that, for sure. What other questions?
Talking about the pricing, so what if you have government contracts, which are procurement, so I have procurement contracts, so they're set prices for things.
Yeah.
Is there a way to maximize?
Yeah.
I would say, so government contracts, it's a set price. You can't charge more, right? So then it's how can I look at my other expenses and make sure that I'm not spending too much. And so looking at it and figure out, do I have any margin? And then a lot of the times we go through line by line in our expenses and have a conversation of like, why are we doing this? Who are we using? Is that the best use of our money? Is it, do we need to be spending this much on marketing? Do I need this or that? And it's figuring out how can I be as efficient as possible and take care of my people. But when prices are fixed, it's an expense game. How can I?
Is it better to get out of that then and go more to the private sector?
There's a lot of people that make a lot of money in government contracting, and so that's more of a what do you want out of your business?
Yeah, that's a strategic question that you're asking, right? Yeah. And it depends on, like you said, it's what you want. But I'm with Albert. If we're talking about those 6 areas of the business that we work with, I mean, what you're saying, I would start with leadership and operations, because those 2 are going to be the key to, winning in that area. Because in creative solutions that maybe other competitors aren't thinking about, so that you're not wasting time or spending money in areas that they are to give you that edge. But without getting the specifics of the business, it's probably as much as we can say right now. Yeah. What else?
As a startup company, of course, you got all your expenses, and to add to your expenses, how important is it to do stuff like an accountant, insurance?
Yeah,
How do you
great question.
how do you know if it's worth it during the startup?
Yeah,
I would say as a startup, use contract labor as long as you can.
yeah,
So we have a directory that we use for fractional accounting, right? You're not going to go hire an accountant to work in your business or a bookkeeper to work in your business. There's people that do that remotely and do it super well.
yeah.
And so I would say as a startup, use contract labor as long as you can. And when you bring it in-house, that's a fixed expense. And when it's contract labor, that's a dial you can turn up or turn down as much as you can. What was the other part of your question?
Just about, yeah.
Insurance and things like that. I mean, step foot on a job site, like you have to have a certain level of insurance. And so that's the price of admission. But some of those other things in your business, contract labor as long as you can until it is cheaper, more efficient, gives you more speed to bring that in-house.
And if you're thinking, I don't know who those people are, like I don't know how to find a fractional bookkeeper or whoever, like that's something that we can help with. The other thing I would say is, if you're thinking, well, I don't know if I should waste the money, maybe we could do it ourselves, don't do that, all right? They're professionals for a reason. There are a lot of people who think, well, I can do my own taxes, or maybe we can get by without consulting legal on something like this. Like, that's a quick way to get your business into some trouble. So I would say you need the professionals, but doing it in a contract way is a really smart strategy. Yeah.
And as a business owner, like I use the illustration of a dentist. Like if a dentist is not sitting in that chair, drilling and filling, he's losing money. If he's doing all these other things in his business that the business needs, he's losing money, right? And so if we can have other people that are supporting us, that are contract labor for a season, then you can be in there doing the things that generate your business money.
Yeah.
And that's what we need to focus on, especially a startup. Is you need sales, you need sales, you need sales.
Yeah, we talked to so many business owners that they got into business because they liked doing something, and then the business grows to a point where they're having to do things that they hate doing. And a lot of business owners feel like they're trapped in their own business, So I think the key to go along with what Albert just said is trying to making sure that those things that you're not good at, you have a strategy to make sure that they still get done, whether it's hiring somebody, using contract labor, other strategies that we can recommend. And then you can do the thing that you're best at. And when you do that and you're in your area of superpower, that's when your business will thrive. So that's what a business owner needs to be doing. They need to be doing the thing that they're best at. Yeah. Not taking on everything. And you know what? In the early going, that happens. I mean, it's inevitable. At some point, you're going to feel like you're taking on everything. And usually that's when the business plateaus. And so breaking through that plateau and getting yourself back into the place that you want to be and having the freedom to, I don't know, go to your kid's soccer game or, take a vacation. Who'd have thought of that? Like, that seems like, yeah, take a weekend off. Yeah, even a weekend. Yeah, even the ability to do that seems like a joke to a lot of business owners who've been in it for a while. That's not how life has to be. So that's what we want to see. That's what's empowering for us. This is why we do this, because it's cool to see people who get past that and have their life back. Yes?
And I'll say this for the room, but I'll say it specifically. I know y'all are contractors like we are. And I felt like the biggest problem or the biggest mistake I made early on was finding that person and completely checking my brain box off of, I don't need to worry about that anymore. Oh, I found the bookkeeper, I found the tax person,
Yeah.
I found whatever, they're taking care of it. Then I never understood or learned all the processes. So when I had questions or why isn't this working, I could not answer those questions for myself.
Yeah.
And that, I think, really handicapped me in the beginning and from being able to make a quicker relation to how I need to change and what I need to do. Because just checking the box of, oh, I have a bookkeeper, does not mean that you know in your business what you need to do to be profitable. That just means you have a checkbox checked.
Yeah.
Yep.
I couldn't agree more. Thank you for adding that. And that's so true. And that's what we talk about on the leadership part is, yeah, you're never going to be like where you don't know what's going on in this aspect of the business. You still need to be informed. But being informed and leading effectively is very different from being overwhelmed and in the business all the time instead of working on the business.
Because you're ultimately still responsible for whatever happens in that business.
That's right. That's right.
Yep.
So if
the IRS comes to you and says, why not? You can't point to your accountant and say, well, they did it. Well, you signed the
Yeah.
tax return.
yeah,
Yep.
you're still going to
You're
be
still
liable.
gonna be
That's
liable.
right.
So be careful about that.
Yeah.
Have a little bit, my thought is, have a little bit of, and I like that you brought up those income, assets,
Yeah.
financial statements.
Yeah.
Because if you can't read that and follow where they got the information from, then you need to take a course in how to read that. Because that's what you need to do whenever the forms come to you and you're about to sign off on April 15th, 13th, whatever, and make sure everything's where you understand it.
Right.
Yeah.
But you don't have to be an expert
I'm not saying an expert,
Right.
but you be able to
to
if
know
a
the
flag,
story.
Right, if 2 + 2 = 5 and
Yep.
you're coming up, no, this is not right, you need to question,
Yep.
why is that 5 and it's not 4?
Yep.
That's right.
There's
Yeah.
there's a story that those financials are telling,
Yes,
and we have to make our accounting team tell us that story.
Exactly.
Like, what is that story?
yes.
And then as a business owner, we can direct the
We can-
story.
That's all I'm saying.
Yes, sir.
You mentioned that hiring contracts, contract as long as you can for a startup. What is y'all's opinion on consulting, on hiring consultants? Good pros, cons, especially for startups?
Yeah. I mean, I think for a startup like what you were talking about, biotech, right? Having the wisdom of a consultant can save you a lot of headaches and a lot of time. It's like any other professional that you invest in. A lot of people don't make that investment and then they end up paying for it later. So you can either pay for it up front and you probably pay a lot less, or you pay for it later. Or with time. And time is everything when you're, depending on your business. But I know in the biotech world, because I came from it, time is everything. So those are things that you really need to think about. Albert, would you add anything to that?
No, I mean, you're asking consultants. What do you think about consulting?
Of course,
I think
we're pro
everyone should
consulting.
I would say, echo what he said. Like, it will save you time. Like, you want to get from A to B. If we can get there in a third of the time, and have some people help avoid some mistakes, then that's the purpose that serves. And
Yeah.
y'all are smart, do-it-yourself people. Like, you're gonna get there, but a consultant can help you get there quicker and maybe avoid some mistakes.
Yeah.
I got you.
Yeah.
The reason why I ask is because I've been a part of like 2 startup companies that had it was a mixed bag of consultants, right?
Yeah.
Some were like pretty good, and some were like really bad.
And I think that's the thing, is it's not just, well, should we hire a consultant or not? It's which consultant and what are they bringing to the table? Where are our gaps and who's the best person to help us know how to fill that? So it's very case by case, depending on what your needs are. But yeah, I still think, Albert points out, you're asking consultants what they think of consultants. They're worth it, but yeah, you want to get the right one,
Yeah.
for sure. Yeah, yes.
What percentage of your revenue should go towards that consultant?
What would you say?
Or is it flat? I noticed what I'm really asking is how much does it cost, I guess? And
Oh, yeah,
can any of us afford it?
different question. Go ahead.
Okay, for our services? Or for,
In
You're getting
general,
smile.
what are we looking at for a small business that has annual revenue less than $200,000 a year compared to something that's millions?
yeah. So the way I think about this question is depending on, it kind of feeds into his question too, depending on the level of expertise that I'm getting, the value that I think I'm going to get out of that service, it's almost like thinking about a hire, right? So if I was going to pay somebody this much per month for these like bullet point items of what I'm going to get for that hire, I want to think about a consultant or think about somebody who's advising me in the same way, right? So what value am I getting per month and what am I paying? So it's not really like, I can't give you a pat answer or a percentage, but I would just try to think of it like you would if you were going to hire somebody for anything in your business. You know, what is the value of that service that they're providing to you? Does that make sense?
Yeah, so it's like
Yeah.
hiring a CFO, but would I be hiring a CFO part-time? Like I'm trying to look at the cost.
Yeah.
Because, yeah, it's great, and we probably all want it, but I'm looking at my, revenue going, I would probably have to take out a loan to get it,
Yeah.
Or what do I have to get rid of? Because it's such an initial investment, although I see the benefit of it,
Sure.
but you're not making me money, you're just a cost, right?
Right.
When I'm hiring an employee, they're making me money,
Right.
Yeah.
So,
Yeah,
That's where
it's a
I'm
strategic conversation and planning with cash. And so it's, if you government contract and you need a contract writer or grant writer that is really good at that I want to go, now I'm tired of these procurement contracts, I want to go win this open bid, whatever, like hiring a consultant to initially get the work, like that's invaluable because then you're gonna learn this new thing that then you can rinse and repeat, and so that's worth a lot of money. Or if it's something like what we do, it's pretty minimal and month by month, and when you're done, you're done. When you want to be done.
I will say for what we do, I mean, every consultant's different. What we do, we're typically not working with solopreneurs. We're working with people who are big enough that they have a team of a few people at least. So usually when a business has reached that level, they have enough that they can reinvest back into the business in whatever form that they're choosing, and that, in our case, ends up being the expertise that we bring to the table. But
so that
yeah.
would be that reinvestment at the bottom of your slide, that's kind of when
It
you do that?
can be. It
Yeah.
can be, but not necessarily. If you're like wanting to improve, like it's an investment that you're
Yeah.
trying to grow your business. You want to get a return on that.
Right.
Yes, sir.
Yeah, speaking of like reinvesting in the company, obviously at the beginning, let's say, profits are tied, money's tied, yeah, maybe sales, there's cash flow, but it has to go back into the business to actually grow the business.
Yeah.
To the point of, hopefully we can actually have a team, actually have, market share and stuff like that, right?
Yeah.
Is that something I'm trying to ask is, is it best to kind of be a little systematic and say, hey, you know what, I should set aside like a percent, if I can, a certain percentage that could be reinvested into the company, back into the company, because I mean, a lot of founders, they don't take a salary,
Yeah.
they just build the thing and then, move on from something that's, turning into a part-time into a full-time and stuff like that.
I would say
Is it best to be systematic with like,
create a plan. Like create a plan.
Instead
For-
of just fire
for-
off the hip, right?
Yeah, for, in 2 years, I want my business to look like this. I want this income and this profit, and then reverse engineer that. And know that, to get to that income amount, I need X amount of sales.
Yeah.
For that, I'm gonna need this kind of labor and equipment, and you know what that picture is gonna look like? And then reverse engineer what I need to do each month and understand, I'm not taking a paycheck, but I know
Yeah,
it's
right.
gonna be that.
Yeah, so
And
it's
that-
just
that
not,
makes-
it's
that
not,
makes it
yeah,
worth it.
exactly, so
Yeah.
you're just not slogging away for
No.
nothing.
That's right. And every one of our clients knows what they're shooting for 2 years from now. And they know what the next 90 days should look like. And they know what the next month should look like.
They didn't know that. They didn't know that.
Yeah.
But
So,
Now they do.
yeah, because that's the way we need to think if we're going to be strategic in our business. Otherwise, we're flying by our seat of our pants and just hoping it works.
Yeah, right.
Yeah.
That makes sense.
Okay.
We're at the end of time.
Yep.
Thank you guys so much.
Thank you.
Thank
If-
you so much for being engaged.
If you would, thank you. If you want this slide deck, I think I gave everyone a business card. Please hit us up. Our email is there on our website. It's on that QR code. So I'm happy to share this information with you guys. Yeah, thank you all.